All right, chapter 7, we're moving into the next step of the accounting cycle, and we've gathered the source documents, that's step 1, right? We've analyzed those source documents, that's step 2. We're recording those source documents, now those transactions in the general journal, that's step 3. Now we're going to take that information and post it into something called the general ledger. The ledger is a group of all of the accounts. It contains all of the accounts that your business or the business is utilizing. The ledger allows us to see the running balance, or exactly how much or where we're at in terms of the balance for that account. They're like formal T accounts. Back in chapter, 5, I think it was, we used the T accounts, right? And just got the running total of where we're at, debits and credits, debits on the left, credits on the right. Running total of where those debits and credits are, and then at the end we came up with a balance. The only difference is now that these ledger accounts are going to show us that balance at any given time. So at any given time, it gives us a snapshot of where we're at in terms of our business, in terms of our accounts. There are a couple of different things I need to talk about here just so that you're aware of them. The first one is opening an account. So there's 2 types of accounts that are going to be open. One's with a balance and one's without a balance. If we're going to open up an account without a balance, all you're simply going to do, and this sounds really, really simple, and it is just this simple, you're just going to simply write the name of the account and the account number. That's it. Okay, so you've created an account in the ledger by just putting a name on it and applying the account number that's associated with that. If we're going to open up an account, like we have in this example, we open up an account, cash and bank account with $1,000 balance, then we're just going to simply put that balance in there. So let's do that here. I'm going to do that. Okay, so our account is obviously cash and bank. So I'm going to write that account name in that line. Cash and bank always will have an account number of, you probably picked up on this already, 101. Cash and bank is always that first asset account. Okay, just like we did in the journal, we have to put the date in. So we're going to put in that first line 2000, the year 2000, whatever the date is, whatever the year is. I'm going to use a dot just to make it a general statement. The day, we're doing this on January 1. And the description column in the general ledger is a little bit unique. There are only 4 instances where you'll write anything in the description column. I'm going to write them down here on the bottom so the people at home can see it. Okay, the only 4 options are actually 5 options. We're going to write the word balance. Write the word balance if we're opening up an account with a balance. So in this example, we write the word balance now. If we have a correcting entry, and we'll talk about correcting entries here probably tomorrow. We won't get to it today. We'll leave it for tomorrow. But we'll talk about correcting entries tomorrow. If we have a correcting entry, and that's where we notice that there's a mistake, and we have to fix it. That mistake would have to be if we used the wrong account. If we use the wrong account, we have to undo that account and then do the one that we're supposed to do. So then we would write the phrase correcting entry in that description column. That's the second option that we have. The third is an adjusting entry. And adjusting entries are used to update the account. We'll get to this, I think, more in chapter 8 and 9. But when you think of something like supplies, so if you have an account for all your office supplies, you're not going to keep track of how many pens and pencils and erasers and everything that you have every single day, right? You're probably going to do that like once a month or once a year, just for tax purposes, understand what your inventory is at. And that inventory is going to be different than what you currently have posted. So that's where you're going to adjust that amount, which would be done through an adjusting entry. And then the last one is a closing entry. Remember in chapter 5, we introduced those temporary accounts, expenses, revenues, and withdrawals. Those are temporary accounts. What is a temporary account? The account that we're going to close at the end of the period. When we get to that point, we're going to post those closing of those entries to the general ledger as well. Okay. Kind of take a look at our ledger, the way our ledger is set up. Date, description, we talked about. This post reference column. That's going to be a tip or identification as to where this came from. And most of our transactions that we're posting, it's going to come from the general journal. So we're going to put a code in there, G, which stands for general journal, and then the page that transaction is posted on in the general journal, page 1. So G1 would be what would go in a lot of that post reference column. The first set of debit and credit columns, those are to mirror what the transaction showed, and then this balance section is to keep the balance of that account. We're opening up this account as cash and bank account, so we're starting with $1,000 in this cash and bank account. Is cash and bank going to have a debit or credit balance? Did he? Debit. Why? Okay, because it's an asset. Cash and bank is an asset. Assets have to have a debit balance. So we're going to simply write that amount in that debit column. Again, assets, any type of asset account should only have balances in the debit column over here in the balance section. Can there be credits, cash and bank over here? Yes, because we can pay out money, right? This is reflecting or mirroring what we did in the journal. But they should only have, cash and bank should only have a debit balance. You should never have anything over here in the credit column. Or any asset. Or any expense. Or the withdrawal account should only be in that debit column. Liabilities, capital, revenue should only have a credit balance. Why is that other one there? Well, because we don't know what type of account we're going to put there. It's a generalized format. Very generic format. Okay. Let's take a look at the example that you have in your study guide here in terms of how we're actually going to post to the ledger. The first part of this is simple, right? We did this before. This should be getting easier. I think for the most part, honestly, I feel comfortable with, for the most part, that everybody knows and is pretty good at doing this, doing the analyzing, okay, which is good. Okay, so we're going to do this. We're going to start on page 1 here of the general journal. Our example is an age-old example of the owner, Krista Vargas, investing $25,000 into the business. We'll do all the formal beginning things with the year, just to show you to go there. The month, December 1st. Okay, in this account, in this transaction, what account is going to be debited? Because debits get listed first. Cash in bank, as cash in bank is increasing. Okay, one thing I noticed from the test is make sure you get in the habit of placing these accounts in terms of indenting in the correct spot. Debits should not be indented. So in other words, there should be zero, or at least very little, space between the left margin, if you want to call that left borderline, and the account name. Make it obvious to me that you know that the debit account is the first account listed, and it's not indented. We're going to debit that account for $25,000. Second account that's credited in this example. It's the capital account. We don't have it listed here. Well, what would be the source document? What would likely be a source document for this example? It's not stated here in the problem. But what would you like? What would you expect to see for a source document? Memorandum. Memo. Okay, so I'm gonna put that in here just so that we know that source document needs to be there. And prior to chapter 7 now, this transaction was done. But now we have another step. Now we got to post this, update our accounts. Okay, so I'm going to open up a couple of accounts down here at the bottom. They're not going to have balance. I'm just going to put them in. My first one is cash and bank. Cash and bank almost always has an account number of 101. And the second account that I'm going to open up Kristen Vargas capital account. The capital account is usually going to have an account number of 300, so I'm going to give it account number 305. That account number is important because we're going to use that later on. Just a second here. We recorded our transaction in the general journal. Now we got to post it to the general ledger. Just like we did in the general journal. Once we get in the ledger, the first entry, we need to make sure we put the year in. Okay, so we're going to post that cash and bank account, how that was affected, the date doesn't change, December 1, that's the day that transaction happened. The description column we're going to leave blank. We're going to leave it blank because it's not one of those 4 options that we had before. It's not an opening the account with a balance. It's not a correcting entry. It's not a adjusting entry. And it's not a closing entry. So we're going to leave it blank. So your typical post from the general journal, that description column is going to be blank. The post reference. Where did this amount come from? It came from the general journal on page 1. So the abbreviation that we're going to use is G1. In accounting 2, for those of you that are sticking around, In accounting 2, we get to other types of journals. Sales journals, purchases journals, cash receipts, and cash payment journals. So that's where then this post reference changes. But for accounting 1, it's always going to be the general journal. Page number might change, but it's always going to be the general journal. What happened to this account? It was debited for $25,000. That means that our balance is going to be $25,000. Okay? Now we're not done. We have to identify where this transaction came from, so we're not just making things up. And references back to the general journal. That's also why the source document here. But now we have to copy over here the account number. Now, post reference back in the general journal, we're going to put the account number. And the purpose of that account number is to just tell us that transaction, or at least in this case, that part of the transaction, has been posted. It's kind of like checking it off. It's done. We don't have to worry about it. It's been fulfilled. We do the same thing with the Krista Vargas account. And again, as we continue to add transactions to the general ledger, now we don't have to worry about writing the month anymore until the month changes. If we would have a cash in bank transaction on December 2nd, we would just start with the 2 here, continue to go. Okay, so in your study guide, and those notes have been posted on the classroom, you have the steps. Although I didn't formally go through the steps, like step 1, name them, those are the steps. Okay? Don't forget, the easiest thing to forget are these post references, especially the ones in the general journal. But this is like checking it off. This is a little bit more formal, a little bit more informational than just putting a check mark in there. Well, that's basically what we're doing, is we're indicating that these 2 accounts, or this transaction has been posted to the ledger. And it's done.